Hello, everyone. Today on the final bar, I'm joined by John Kosar from Asbury Research. He'll tell us about his macro model called the Asbury Six, also a sector rotation model and where it's identifying some potential opportunity here going forward. Overall, the market chopping around that key 3,800 level. This is where we ended yesterday. So another day of not really moving much directionally. When we get to our final bar mailbag later in the show, we'll talk about what that actually means from a candlestick perspective. Ladies and gentlemen, this is the final bar. Hello, everyone. Welcome to the final bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a rainy Redmond, Washington. Thanks for joining us every weekday after the close as we look at these markets together. Focus on the message of the markets through the charts. At a time like this, where there's uncertainty, where there's movement, where there's rotation, where a lot of things in flux and a lot of questions about potential headwinds and tailwinds, the message that is embedded in the charts, I would argue, is the most important one. And if you can just, in general, lean into trends that are working, lean away from trends that are not working overall, I think you'll be able to navigate most market situations pretty well unscathed and overall do just fine. So that's our goal, is to identify trends, to follow those trends, and then anticipate when those trends may be exhausted. Now, we have some fantastic guests along the way to help us navigate all of these questions that we're trying to answer. I'm excited to talk to John Kosar again from Asbury Research. He's been a guest a number of times on the show, and it's always been some interesting thoughts about where we're headed next. Tomorrow, we have Doug Bush from ChartSmarter in New York joining the show. That's on the 13th. On Thursday, the 14th, Julius DeKempener, founder of RRG Research and host of Sector Spotlight, is going to be joining us talking about sector rotation. Next Tuesday, our first guest of next week will be Chris Shavacco from Shavacco Capital in Atlanta. He does such a fantastic job sort of laying out some thematic big picture ideas. Also, a special reminder, this coming Saturday, the 16th, is our market outlook event for 2021 called Charting Forward 2021. We've put together a fantastic group of experts, all sharing their perspective on what's coming. We're going to ask the same question of every expert and then share with you rapid fire style all of their answers. It's going to be a great experience to hear where the S&P may be headed, thoughts about overweights and underweights for sectors, for stocks, and where opportunities may lie around the global equity universe. So don't forget, Charting Forward 2021 coming this Saturday on StockCharts TV and on our YouTube channel. Let's get into our market recap. I did want to mention we had a poll going recently asking about what you do in your free time, essentially. What do you do to decompress after a tough day in the markets? And I'll be honest with you, we got some fascinating and very interesting responses across the board. But overall, the reason for asking that is to remind you, I mean, if you look at my blog, it's called The Mindful Investor. And I think a lot of times, if you focus too much on the analytical side of what you do and not enough on the human side of what you do, taking care of yourself, what you're putting in your body, what you're putting in your mind, I think you're shortchanging your own ability to overcome challenges, to find success, and to set yourself up with good habits and good routines. So I would encourage you to think about how you would answer that question, what you do when you're not looking at the markets, or what you do to decompress from a difficult day trading or a different experience, a period of loss in the markets, and how you can help right yourself mentally, physically to get back to it. Again, any investor I have ever met with or talked to that has had success over the long term will share with you a very painful story, or a series of stories, usually early in their career, about how they lost money and how they got through it. So I would encourage you to think about your own ways to deal with those in a healthy way as much as possible. Let's get to our market recap. As I mentioned in the introduction, it was really a choppy day. And if you look at the candle chart, it's a doji candle, which is when the open and closes are about the same, very similar to what we saw yesterday. And overall, that represents indecision. So we closed yesterday around 3,800. all day. We sort of traversed around, sold off a little bit going into the noon hour, came back up, and again, just essentially didn't go anywhere. Now, having said that, if you look at the right side of my screen, you can see that underneath the hood, there was plenty of movement. And a lot of times when I see the market in a choppy formation, just in a sideways formation, really what that tells you, it's equilibrium, right? Overall, we have set a value for the S&P. We're kind of rotating around there. There are movements happening underneath the hood, and this is why I would argue, looking at ratio charts, looking at relative strength, and focusing on outperformance and underperformance, looking at how stocks are breaking out or breaking down, how assets are rotating between different themes, that can help you identify opportunities. So even though the S&P may be stable, there are things that are working and there are things that are not working. Today, for example, the energy sector, the XLE, up 3.5% on the same day. Communications services down 1.5%. So look at rotations like that and make sure you're focused on relative winners and relative losers, and make sure you're on the right side of those. Having said that, while the S&P was flat, the small cap index was up in a pretty big way, up 1.7% on the S&P 600 small cap index, the mid cap index up over 1%. So again, if you look at just the market and describe the market as the S&P, sort of flat and non-directional. But if you look at individual stocks and themes and small cap versus large cap, plenty of things, plenty of alpha to be had. The VIX, by the way, back below 24, just around 23.3. Looking at other asset classes very quickly, bonds essentially were a zero. They sold off earlier in the day, but rallied back to close right about at the open. So 10-year yields around 114 or so. It's about fine. And then the commodity space, energy working, oil working, copper prices higher, gold and silver up. They actually were down earlier in the day and rallied to close at the high. So it was sort of the one market in the morning, a totally different market in the afternoon. Bitcoin, if you follow cryptocurrencies, chopping around a good deal, but closing around 34,000. This is down off of 42,000 just a couple days ago over the weekend. Let's look at the chart of the S&P 500, focus on what we're seeing. I mentioned short term, how you've had, the rally into the end of last week, and then the last two sessions essentially have gone nowhere. We are rotating around the 3,800 level. So it certainly seems to be a pivot point or a level that has meaning to this market. So I think, seeing whether the S&P is able to break above 3,800 and follow through would be, point number one. Outcome number two would be we sell off and establish that as a pretty key resistance level. Based on what I'm seeing with what's called a hanging man candle, I had to just think through my candle patterns here very quickly. The open and close near the highs, and then the long lower shadow is called a hanging man candle. The had two others that are called doji candles, where the open and close are right at the same way. All you need to know about that is that the open and close are at similar levels all three of those days after a run higher, right? So you had a couple days higher, pushing the market to new all-time highs, and you have 3 candles in a row, 3 days in a row, where we really don't go anywhere. We open and then we don't go any further, and that tells you sort of exhaustion, sort of an indication of trend exhaustion, suggesting this uptrend may have been it, and we might need a little bit more of a pause of sorts. The RSI was overbought there on Friday. That was when we made our last closing high. So certainly the advance has been paused for the overall S&P. And again, underneath, I think there are plenty of things that are working. If we do get a bit of a pullback here, the first key line in the sand, I'm looking at the 50-day moving average, which is similar to these previous lows from December. That's around 36.50 on the S&P. So, that would be a really logical pullback level. This green shaded area is sort of that's the top end of it. It gets down to these previous swing lows we had from November. So that's certainly a sweet spot where I would anticipate some support to enter in, and I would anticipate some buyers coming in to look for opportunities there. Looking elsewhere very quickly, I mentioned energy number one, consumer discretionary was number two, followed by materials. Those are our 3 top sectors. On the bottom, you have communication services, then healthcare, and then utilities. So utilities, boy, I tell you what, on a relative basis, just have not been great. And this is why we talk about the relative line, and we talk about when the relative line is rolling over. It's not a great idea to be looking for opportunities in sectors or in themes where the relative line keeps going down, because all that tells you is it's just underperforming consistently. And utilities, unfortunately, have been a chronic underperformer. So until proven otherwise, I'm going to assume that's going to work. If you look at the scooter reports today, so these are the stocks that are doing the best. You have things like Occidental, Apache, ConocoPhillips. I'm picking out the Marathon Oil. I'm picking out the energy names in here just to illustrate that about half of the top performers are in the energy sector. You do have other stocks represented here. So Cincinnati Financial, CINF, which is one of the insurance names, breaking to a new swing high there, finally getting above a nice broad base and following through to the upside, which is a nice sort of an impressive breakout there. And some other sectors, some other stocks as well. Bank of New York Mellon, so looking at a regional bank as well in the top performers. I would notice in terms of industry rotations, and then we'll talk about global ETFs as well. Just very quickly on industry rotations, the automobile group continues to be at the top. This is Tesla's group, which just continues to work. Renewable energy equipment, that's solar stocks, that's some hydrogen names. So our top ranked stock in the large cap universe for a long time had been Tesla, was overtaken recently by ENPH, which is in this renewable energy equipment that's called Enphase. And just recently overtaken by NIO, which is in the automobile space, and that's why that group has done very, very well. So there's been some shuffling around here in the top 10, but overall some consistent names there to pay attention to. You'll notice that 4 out of the top 10 industry groups today, in terms of biggest gainers, were in the energy space. So what did not work today? Broadcasting and equipment within communication services, publishing within communication services, mobile telecom. So 3 of the bottom 10 are in that same group. Tobacco stocks have been a tough one, and we've talked about the underperformance of things like Philip Morris and Altria, and that certainly seems to be continuing here today. Also a concern for healthcare. We talked about healthcare potentially emerging. It's worth noting pharmaceuticals, medical equipment, both down today after some question in terms of big pharma and whether healthcare can emerge overall as a relative outperformer. Long term, the relative strength still looks pretty good, so that might be a theme to pay attention to. We need to take a quick commercial break. Back with my guest, John Kosar from Asbury Research. We'll see you in a minute. Hello, everyone. Welcome back to the Final Bar. This is Dave Keller here at StockCharts.com. It's so good to have you on board every weekday after the close, 6 p.m. Eastern, as we debrief on the events of the day through the charts, through the lenses of technical analysis, behavioral finance, investor psychology, et cetera, et cetera. If you have questions on anything coming up in your process of analyzing charts, things you hear from our guests, from your hosts, anything on StockCharts, just shoot us an email, thefinalbar@StockCharts.com. On Twitter @FinalBarSCTV, just tag us in a comment, or on our YouTube channel, just put a question or a comment right below your the video that you're watching. We'll capture all of those. We're going to do a mailbag segment later in today's show. We'll do another one at the end of the week on Friday, and we'd love to answer one of your questions on the air. I want to bring on my guest, John Kosar from Asbury Research. John's joining us from Chicago. He's been a guest on the show a number of times. John, happy holidays, happy New Year, and welcome back.
Happy New Year to you and everybody listening. Great to be back. Thanks.
So, John, I think of you as one of my favorite macro analysts, or strategists, just thinking about the big picture and where we should be focused. Your Asbury Six, I think, really encapsulates that macro perspective. Let's start us there. Tell us what you're seeing big picture.
Sure. For those who haven't seen the Asbury Six are 6 different indicators. 5 do not have to do with price. And we put them together because they test well together. If one gives a false signal, the other ones seem to pick it up. The A6 has been on a risk-on status since November the 5th. And it's been blinking a little bit. And by blinking, I mean there's been 1 or 2 of these that have been turning negative, which would turn up red here in the column on the right. But overall, they have kept this in the market since the beginning of November. So just from a day-to-day, what's the health of the market perspective, as far as we're concerned, it's healthy.
And it's interesting going to your second chart, John, thinking about the NASDAQ. I mean, a lot of people have thought about the FANG stocks, technology leadership, and a bit of a pause there. What are you seeing with the NASDAQ overall?
The reason I put this out is because now that we know the A6 is flashing green and we've been positive, the next question is how far do you think we can go? We have a target of 3850 in the S&P 500 that we've had that's effectively met. This has not been met yet, 13,700 in the NDX, which is the big cap tech. So I try to read the data and not to predict, but you like to have a ballpark idea of where we're going, and this is our next target on the upside.
It's interesting. So 6% isn't that far, and that's not much more of an upside, but potential for a little room to grow then for big cap technology. Now, your final table really speaks to your sector rotation model. Talk us through this and where we're seeing some opportunities.
Sure. This is our SEAF model, which is Sector ETF Asset Flows model. And all we're doing here is instead of measuring the relative performance of price, we're taking the 11 sector spiders and we're calculating as of our last closing day here, which is the end of last week, what dollar percentage of each of those is if you look at all the money invested in all 11 of them as being a sector universe. And then we break it down into 3 different time frames: trading 5 days, tactical 21, strategic 63, and we highlight the 2 sectors in each time frame that has the biggest percentage asset flows in, and those are green along with the date, and the 2 that are the biggest percentage asset flows out, and those are red also along with the date. This model has been overweight financials and energy since 11/12, November the 12th. XLE's up 26.7% or outperformed SPY by 17.4 since then, and XLF is outright up 16.3, outperformed SPY by 7.7, and those are still where the money is going. So this tells us, after we know we're risk on, when A6 tells us we're risk on, this helps us to figure out which parts of the money are attracting the most investor capital, and we try to jump on those sectors.
So it's really speaking to the strength of financials and energy, right? Coming out of a relatively, surprising weak point going into last fall, really starting to appreciate. So, given the limited upside for the S&P potential, or given the fact that it's reached your target of 3850, a little bit of upside with the NASDAQ, is that where you would be focusing now if you had new money? Would it be in financials and energy, or how would you think about, the next month or two from here?
That's a great question. This is the hardest thing to do when the S&P is 16-17% above its 200-day moving average, and you have some new assets to allocate into the market. I like to follow where the money is going. Instead of buying the plain vanilla, I like to see, okay, where's the money going? Where's the performance? And right now, the money has been here for 2 months in financials and energy, and the performance has followed. So yeah, I think if you need to get some money to work, try to follow where the money is going. And right now it's in financials and energy.
It's such a great take, John. This is a fantastic walk through your process, what you're seeing, and thanks for highlighting some of these emerging or emerged groups, I would say, in terms of financials and energy with potential for further upside. John Kosar from Asbury Research, thanks again for coming on today.
Thank you. Have a great day.
That's John Kosar from Asbury Research joining us from the Chicago area. Again, I love John's work. His Asbury Six is just a great way of thinking about the big picture and trying to answer that question. Is it risk on or risk off? And then where should we be headed? I think his comments at the end, I think, were really interesting, compelling, where, the challenge is once you've had this run, once you've had, some of these trades that have worked. I know a lot of people looking at the chart of financials, looking at JP Morgan breaking to new all-time highs potentially, looking at energy that's rallied so far from relative lows. Do you go into names like that? And certainly seems, John suggests, following the flows, and it's going into some of those more value-oriented opportunities. We need to move on to our next segment, which is the final bar mailbag. Again, our goal with the mailbag is to hear from you, understand what questions are coming up in your normal process of analyzing the charts, things you're hearing on this show or other shows, anything involving a chart of the markets. Shoot it to us via email, thefinalbar@stockcharts.com. We'll do our best to point you in the right direction. Let's get right to the mailbag. So we have some wordy questions over the last week or so I'm going to summarize the best I can, but I appreciate so much all of you sending in some thoughts to us. The first one is actually related to scanning. Basically saying, I love the scanning engine. What I'm trying to do is look for let's see, look for stocks that are at least above their 20-day exponential moving average. So X percent above that. I want to do the screen based on the relative strength ratios, the RRG momentum, which is, oh, that's great. So looking at the two RRG characteristics. So if you look at the RRG scatter plot, basically, right, the visualization, there's two components to it. There's the relative strength ratio, which is the x-axis. There's the relative strength momentum, which is the vertical axis. And things rotate in a clockwise direction because of how Julius de Kempener designed it, which was basically, looking for relative outperformance and the momentum increasing, it goes northeast. When it's still outperforming, but the momentum's coming off, it rotates down. And that's how you get that clockwise direction. Your comment was, I would love to be able to export or I'd like to screen on some of those items, then save it to a chart list and be able to filter things like earnings reports, options expiration. This is such a great screen you're trying to put together. And as you implied in your question, not all of that is built into the scan engine just yet. I'm going to spend a little more time thinking about the question because you put a lot of particulars, and I'll send you some ideas if I have it. But the short answer is no. It's not quite ready to handle some of those things. You've hit on a number of things that we've already been talking about. And part of our plan for 2021 is to really upgrade the scanning engine and try to look for some ways that we can improve your ability to scan through a universe and look for opportunities. So things like the RRG values absolutely will be part of it. Things like the scooter rankings are certainly in there, but we could probably upgrade some of the ways you could do it. More fundamental criteria is certainly a place that we are looking for. Looking at valuation metrics, looking for earnings dates. So only stocks that are not reporting in the next 2 weeks. All of those sorts of things are all being incorporated into the scanning engine over the course of this year, hopefully sooner rather than later. So look for a lot more. And I guarantee you, myself, Grayson Rose, Chip Anderson, as much as we can share, once those things are ready, we'll certainly be doing so. Question number 2, I'm a new member. Welcome to the StockCharts family. Good to have you. I'm hoping to get an indicator relative volatility index added as an included indicator with membership. Thanks for that suggestion. We'll take a look at it and certainly put it on our list. If it's something we can add, we're certainly looking to do so. And I would tell you, we have done so much with the ACP, the Advanced Charting Platform, over the last 6 to 12 months, and we will continue to improve that platform for sure. We are also now looking as a team at the StockCharts platform, just the traditional charts that many of us have used for many years, and we're certainly looking to improve a lot of things with StockCharts as well, particularly in the new year. So we're looking for indicators and techniques to add. We'll take a look. Also, I'm hoping to create lists without resorting. I've seen Grayson modify his description of his chart list to maintain order, but with the large lists I have, this process is often not feasible. It's a really good point. I'll show everyone what I think you're asking about. So if you go to your member dashboard, go to your chart list, and I'll pick, let's see, this is one that Grayson Rose had shared at one of the pitch segments that we did last week. So, if you'll notice, I actually put these in a particular order by adding a number before here. And actually, if you resort the list by anything that you have in here, so for example, if you add sector and industry, and I say, you know what, I want to sort these by sector, at the bottom, you'll see this little gray button that says number in sorted order. So if you move these things around, and it can be really helpful if you add something like the scooter ranking and say, I want to order it from strongest to weakness, and then you can say number in sorted order. What that's going to do is just add a little number code at the beginning to add it in here. If you edit the list, you can delete all the numbers on the left, so you can resort it. So that is years ago how Chip had designed the chart list feature to work, which is basically it's going to always sort alphabetically, and all you're doing is adding and subtracting numbers or letters at the beginning of the name of the charts, and that's the way you can sort the list. We are actually looking. We were just talking as a management team over the last week at this particular functionality and thinking about the ways that we can help you manage a list of charts, a list of stocks even better. And so look for announcement from us over time. It's going to take us some time to do, but we're really excited to improve some of the reporting capabilities, some of the list management capabilities. So we'll be working on ways that you can bring in more columns, more data. So right now we're limited in terms of what columns you can have. We won't have unlimited, but we'll certainly have much more custom columns. So I could create my own columns with position values, dollar amounts, with buy, sell, hold, whatever custom commentary I might want to do, as well as a lot more fundamental data, technical data. We're going to add more and more columns on here, which allow you to sort and regroup things and do all sorts of really cool stuff. So I love where your head is at, and I guarantee we will be sharing more along those lines coming soon. Your questions, all of you, relate to lots of things we could do differently or we could improve on, so we'll get to it. This next question I love. This came on YouTube. I've always loved the dummies books, et cetera, et cetera. I'm reading Candle Charting for Dummies. In the book, they refer to doji as meaning blunder or mistake. And the person who wrote this response actually is fluent in Japanese, so I love it. This appears to be wrong. While doji, the Japanese characters for doji, does mean blunder or mistake, the word is actually D-O-U-J-I with a long first value, meaning same time. So basically, the book had quoted doji as referring to blunder or mistake, and your comment was, it's actually, if you translate it correctly from the Japanese, it means same time. So what's interesting to me is if you think about what we were talking about with the S&P 500, these doji candles, with the open and close being at the same time, I always was taught that doji meant indecision, right? Which meant we're basically, we've rallied and then there's an indecision point. There's a market indecision. And it's interesting that the direct translation, according to you, means same time. So that actually maybe lines up to me in terms of what the word is meant to describe. And to be clear, when the open and close are at the same point, meaning a doji, from a market perspective, from a psychological perspective, it means the open and close are right at the same point, and it represents indecision and usually suggests a short-term reversal. So thanks for that clarification. That's fascinating, and I appreciate you sharing it with us. One more very quick question. Let's see. If I only watch one daily video on the market, it would be this show. This may be my mother that wrote this in, but thank you for whoever said that one. I appreciate it. Let's see. The guest appearances help expose me to other methodologies. Sometimes I find them too convoluted. A short introduction to the pros and cons to their methodology would be helpful. Every strategy has strengths and weaknesses. That's a really good point. It's something I took to heart. I tried with John today to characterize a little bit about what he's doing, and I think your point is very well taken. We'll think about some of the ways we can help you understand a little bit more. It's tough in a 30-minute show to get as much as we can out of the guests' perspective and their outlook for what they're sharing with us, but also dig into the methodology. Something we'll think about as a production team, see if we can do that better going forward. Those are all questions and comments we've received from you guys in the last couple of days. Really appreciate it. Keep them coming. We'll do another mailbag segment at the end of this week, and we'd love to answer one of your questions on the air. We need to wrap the show. Go to the 3 and 3 charts, 3 minutes. Here we go. Chart number 1 is the percent advanced decliners. This is a common technique that you can use to look at intraday breadth. Look at breadth in terms of stocks up on the day, stocks down on the day. There are a number of ways you can do this. I tend to use it using price. My friend and mentor, Walter Deemer, uses volume on up bars and up stocks and down stocks. There are a lot of ways to try and do it, all trying to get to the same question. Overall, is there more uptrends or downtrends during a particular day? The reason why I'm bringing this up is to show you that the last time we have had 90% of the NYSE on an update was April 6th. So the answer is we haven't had a lot of these. What's interesting is in a bull market phase, a lot of times you have these 90% updates, which show a broad buying, which shows you broad movement into equities. You really haven't had that, particularly in the last 6 to 12 weeks. We've had the most we've had is maybe 80-82% of stocks up on a day. So it really shows you really haven't had big blow off rallies. You have had one big distribution day, two maybe over the last 6 months. If you look in late September and late October, those were at the ends of these pullback periods back here. So I'd be interested to see if we get a sell off, if you get some increase in selling. We really haven't had it yet. Chart number 2 is to look at the ratio of financials versus technology, the XLF over the XLK. Clearly, this ratio, if you look back at a number of years, has been favoring technology in a huge way. That's starting to change. And if you look at the last 6 months, look at how this ratio has gone from a consistent downtrend to now a particular uptrend. It's made a new high for the last 6 to 8 months. So overall, a rotation away from tech into financials plays on what my guest John Kosar was mentioning earlier today, looking at some of the short-term flows as well. Finally, small cap value has been performing much better than large cap growth. That speaks to the sector rotations we've seen. It speaks to days like today where small cap up big and large caps essentially flat. That ratio speaks to the fact that it would be really valuable to look for opportunities in the small cap space versus elsewhere. Folks, that is our show for today. Thank you so much for joining us every weekday after the close for the final bar. I want to thank my guest, John Kosar from Asbury Research joining us from Chicago, sharing his latest thoughts on the overall market. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be safe. Have a great night.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.